Well, in his latest edition of the Greed and Fear newsletter that all of us, as well as most of the investors, look forward to very keenly, Chris Wood of Jefferies has actually said that he's not really surprised by the rising news flow regarding the mutating virus. He says that the mutating virus news flow has undoubtedly heated up over the past week, but however, greed and fear would still stick with the back to normal trade, as he has been arguing for quite some time now. What he is saying is that the key point, until proven otherwise, is that the new strain of the virus does not appear to be more lethal, even though it is considerably more infectious. The other point, as per him, is that there appears to be a considerable amount of confidence that the vaccines will actually be more effective against it, and the vaccine rollout is the key reason to actually continue to own the cyclical trade. What he is saying is that in terms of the new virus strain, the conclusion, as per him, is that such news flow actually gives investors an opportunity to add to the cyclical exposure as far as any pullbacks that may be seen is concerned. What he is saying is that the treasury bond market has not really rallied on this mutating virus story, nor has the US dollar, which basically implies that there has not been any classic risk of action that might have been expected in case markets were taking this new development very seriously. He's also spoken in depth about the political situation in Hong Kong. He's spoken in depth about Hong Kong. But coming towards India, what's very exciting as far as Indian markets is concerned is that Chris Wood, in his Greed and Fear portfolio, or in the Asia Pacific ex-Japan relative return portfolio, he has gone ahead and increased the allocation to India by a further 1.5 percentage points. Now, the main reason for this particular increase as far as allocation in his portfolio is concerned is that he says that the 7-day average daily COVID cases is now running at 78% below their peak that, according to him, was reached in mid-September. Now, he also notes that even though the Diwali holiday took place in early November, and even though you saw heightened activity in terms of movement of people as well as goods and services, given the fact that India has managed to keep a control or keep a lid as far as the growing COVID cases are concerned, he believes that there is increasing hope, or there is growing hope, that COVID in India really has peaked. He has gone ahead and increased the allocation to India by 1.5 percentage points. The underweight in Australia is also reduced by 0.5 percentage point. This he has done by actually reducing the China overweight by 1 percentage point, and also reducing the allocation in Pakistan by 1 percentage point. So overall, his allocation to India is quite high. It is almost at 14%, a 5.1% mismatch from the benchmark. So it's quite a strong overweight as far as his particular portfolio is concerned.